Welcome to the Deep Dive. Today, we're taking a close look at Aurionpro Solutions.
Right. A tech company that's been making some interesting moves, especially in banking and transit.
Exactly, and our goal is pretty simple. Get past the headlines, really dig into what's driving their performance and maybe what their future looks like.
And we're using a recent analyst report as our guide here. It's from Monarch Networth Capital Limited, MNCL.
A detailed report.
Very. So we're aiming to pull out the key insights for you without getting lost in, super technical stuff.
Consider it your quick guide to what matters with Aurionpro right now.
Precisely.
Okay, so let's dive in. The report, it kicks off highlighting some really strong recent numbers, Q4 FY25.
Yeah, the end of their fiscal year around March, April 2025 for them.
And the revenue growth was 6.8% compared to the last quarter.
Correct. And a pretty big jump year on year, 32.4%.
Wow. So that translates to what, Ori's $3.27 billion for the quarter?
That's it. And Ori's $11.73 billion for the whole fiscal year. Those are, substantial gains.
Definitely. What was behind that growth? The report mentions a few things.
Yeah, it seems like a mix. Strong execution, particularly in their banking division. They delivered well.
Okay.
And then there's the ramp up of those big multi-year projects.
Like the SBI and Panvel ones mentioned.
Exactly. That momentum helped. Plus, there's usually some seasonal strength in their Q4 business anyway.
Right. So solid performance, boosted by project progress.
Sort of a confluence of factors, yeah.
Now, speaking of momentum, that transportation and infrastructure segment, the TIG segment, that really caught my eye.
Ah, yes.
The report flags growth over 45%.
Both year on year and quarter on quarter in Q4. That's huge.
It really is quite remarkable growth for that segment.
What drove that? Was it those Q3 deal wins?
Absolutely. Key drivers were those major deals they bagged in Q3 FY25, specifically Delhi Metro and Chennai Metro.
Okay, big names.
Yeah, and the crucial part is that the implementation work on both started pretty much straight away. It was already happening in Q4.
Ah, so they could recognize revenue quickly. Exactly. It wasn't just signing the deal. The work began. The revenue flowed.
And these aren't just any projects, right? Metro projects are complex.
Definitely. They're often flagship initiatives.
Oh.
Winning and delivering on these shows their capability for large-scale stuff.
Yeah.
It's a validation.
Could open doors elsewhere, I imagine?
That's the idea. Success here builds credibility globally.
So these metro projects are a big growth engine. Is this sustainable? The report seems optimistic.
It does. MNCL is looking at potentially 30% plus growth in TIG over the next couple of years.
Really? Based on what?
Well, they mentioned a robust pipeline, so more potential deals lined up and just generally strong ongoing traction in that whole transit area.
Okay. But what about potential roadblocks? Any risks mentioned for that TIG segment?
Yeah.
Like delays or competition?
Well, the report does flag the inherent risk of delays in these big infrastructure projects. Timelines can slip. That's just a reality.
Sure, that makes sense.
Competition is always there, of course, but these recent big wins suggest Aurionpro's offering is pretty competitive right now.
Okay, let's shift gears a bit. The banking segment. TIG was soaring, but banking was a bit softer quarter on quarter.
Yeah, slightly softer QOQ growth there. The report puts that down to timing, mostly.
Timing, how so?
They had a higher volume of license sales front-ended in the previous quarter, Q3.
Front-ended, meaning they booked more of the annual license revenue earlier.
Exactly, like selling a year's software access upfront, and more of that happened in Q3. So Q4 looks comparatively lower, but it's more about when the deals closed, not necessarily a drop in underlying demand.
Gotcha. So it's not a slowdown, just how the sales landed.
That seems to be the interpretation, yeah. The outlook for banking is actually still positive.
Okay, so what are they expecting for banking moving forward then?
They expect strong growth to pick back up from Q1 FY26, so the quarter starting right after the one we just discussed.
And what's driving that expectation?
New deal wins, not just India, but across APAC as well.
Right.
And there's also the strategic expansion within lending. They're moving beyond just corporate lending into retail, too.
Oh, interesting. Where are they focusing that lending expansion?
Seeing strong traction in Asia, apparently, and they're making a bigger push into Europe now.
And corporate lending.
Yeah.
Still mostly outside India.
Yeah, the report notes corporate lending remains largely outside India. Doesn't spell out exactly why, but likely strategic choices based on markets and regulations.
Okay, interesting moves in lending. Now, finances. Cash flow management, the report highlights improvement there.
Big time. They had negative operating cash flow in the first half of FY25, which isn't ideal.
No.
But they managed a significant turnaround in the second half. led to much better full-year performance.
And the cash conversion cycle improved too.
Yep, down from 103 days in FY24 to 94 days in FY25.
That's a good sign of efficiency.
Definitely. And they expect to keep it stable, around 90, 95 days, managing working capital better.
And they built up a decent cash pile.
Seems so. A cash balance of Rs 3.6 billion. The report specifically calls it ample firepower for inorganic growth.
Meaning acquisitions.
Potentially, yeah. They have the resources if the right opportunity comes along.
And what about profitability? Return ratios?
Still healthy, above 15%, even with that 30% plus top-line growth. And there's potential for those ratios to climb higher, maybe 17, 18%.
Through operating leverage.
Exactly. As revenue grows on a relatively stable cost base, profitability can improve. That seems to be the expectation.
Okay, so strong growth, better cash flow, solid cash position. What's fueling the optimism for the next couple of years? Key drivers.
Well, first off, they have a strong order book, Rs 14 billion.
Gives good visibility.
Right. Suggests about 20% organic growth is already kind of baked in.
And looking to FY26.
They're anticipating over 30% growth. That includes the contribution from Fenixys, an acquisition they made.
Oh, okay. And other strategic moves.
Definitely. The acquisition of AI, which is an artificial intelligence firm, that seems key.
Investing in AI.
Yeah, and setting up dedicated AI labs too, one in Paris, one in Mumbai, shows they're serious about boosting their AI capabilities.
Makes sense. And you mentioned Europe earlier. Geographical expansion seems important too.
Absolutely. Europe is a big focus, especially for transaction banking and that lending expansion we talked about.
And the Middle East?
That's also flagged as a growing focus.
Hey.
Both are seen as significant long-term value drivers.
Yeah, any downsides to that European push initially?
The report does caution about some initial cost pressure in Europe in the first half of FY26.
Why is that?
Just the investments needed to get established and capture market share there. Cost before the big revenues kick in.
Standard expansion costs, but they see long-term potential.
Clearly. It looks like they're playing the long game, building for global presence.
And this focus on innovation and expansion, is it bringing in new clients?
Apparently so. They added 42 new clients in FY25.
Bringing the total to
Over 350 now. And what's interesting is the report notes they did this with a relatively lean sales team.
efficient.
And lower SG&A expenses, selling general admin costs compared to peers, suggests they're quite effective at client acquisition.
And the AI investments, paying off yet?
The report says it's leading to meaningful traction, particularly in transaction banking. So, yes, starting to show results.
Okay, let's get to the analyst's bottom line. MNCL's view. They seem positive, right?
Very positive. They have a buy rating on the stock.
And a target price.
Rs 2020, which at the time of the report represented a potential upside of about 47%.
That's a hefty upside. What are their projections based on?
They're forecasting solid growth over the next few years, FY25 to FY27, expecting compound annual growth rates over 20% for revenue, EBITDA, and profit after tax.
And the valuation. How are they justifying that target price?
They're valuing it at 35 times projected FY27 earnings. So, looking ahead quite a bit.
So the analysts are buying into the continued growth story.
Absolutely. The report reiterates that belief in 30% plus growth for the next couple of years, possibly boosted by more acquisitions.
Right, you mentioned acquisitions earlier.
Yeah, and they expect healthy profit margins, around 21, 22%, and a strong balance sheet overall.
And importantly, their base financial forecasts don't assume any new acquisitions.
Correct. That's a key point. So if they do make further acquisitions, that could provide additional upside beyond the base estimates.
Okay, but it can't all be smooth sailing. No investment is risk-free. What do the analysts flag as potential downsides for Aurionpro?
They highlighted a couple of main ones. Firstly, the macro environment, a potential slowdown in IT spending in the banking and financial services sector.
BFSI spending, especially in their key markets.
Yeah, particularly India and the wider APAC region. If clients tighten their belts, it could impact growth.
Makes sense. What else?
The other key risk relates back to that TIG segment, delays.
Delays in those big metro projects or data centers.
Exactly. These large infrastructure projects are crucial growth drivers, but they inherently carry the risk of implementation delays, which could push out revenue.
Okay, so sector spending slowdown and project execution delays. Definitely things for investors and for you listening to keep an eye on.
Precisely. Standard risks for companies in these sectors, but important to note.
So, wrapping up this deep dive based on the MNCL report, the picture's pretty clear, isn't it?
Yeah, I think so. Strong recent performance, especially that TIG segment boost.
Right, driven by those metro wins. Then you have the banking sector, which looks set for renewed growth after that timing issue.
Mm-hmm. Plus improving financials, better cash flow, that solid cash position for potential deals.
And a clear strategy focused on the future AI investments expanding into Europe and the Middle East.
It's a narrative of a company firing on several cylinders, with strong momentum and ambitious plans.
But balanced, as we said, by those key risks around spending and project timelines.
Exactly, a dynamic picture.
Which brings us to a final thought for you to consider. You have Aurionpro focusing on established markets like India, but also pushing hard into new ones like Europe. At the same time, they're heavily investing in AI.
A dual focus, really. Geography and technology.
So how might this mix, this diverse portfolio and tech focus, position them? How will it help them navigate, the changing global landscape for finance and infrastructure tech in the coming years?
And maybe thinking beyond that. Given their tech in banking and transit, what other sectors could it apply to? Where else might they potentially expand down the line?
What could that mean if they did? Definitely something to mull over after processing this deep dive. Thanks for joining us.